After an incredible show of aggression by the Bears last week, the Bulls show they still have some life left in them and signal a possible Santa Claus rally going into the end of this year. Welcome back, everybody, to High Quality Trades, the channel where I provide top-notch technical analysis on the stock market, where we go over simple support and resistance levels, trendline breaks, and pattern formations. And I give you the price targets of where price is headed in the coming days. So let's get into it. In today's video, we'll be going over the most significant support and resistance levels on the SPY, the QQQs, the VIX, the DXY, and Nvda stock. So let's start this video off here on the SPY's daily time frame. So today is December 22nd, and the most recent close of the SPY was 591.15. It reached a high of 595.77 and a low of 580.91. We were positive 0.86% on the day. Alright guys, so what is the SPY currently doing? Well, it looks like here last Wednesday, the Bears made an incredible show of aggression after consolidating up here near all-time highs. They were successful in pushing price below our first support level here of 599.87, and we broke through that like butter and fell towards our next support level down here at 587. It seems the Bears are no longer able to push price lower, and on Friday the Bulls stepped up and pushed price back above our 187 level, and it seems like we may be headed back up towards 599.87. If this does happen come the early part of next week, and we can get above the 599.87 level, then it is very well possible that a Santa Claus rally is in order for us through the middle part of next week and going into the end of this year. Some signals showing me that the Bulls are stepping up at this level are down here on the RSI. We do have some bullish divergence between lows here and the lows here. This divergence is currently playing out towards the upside. But that's not the only divergences we have. On Friday, the RSI showed us another bullish divergence here on the 4-hour time frame, with these lows here and the low and the lower low that the price made on the SPY last Friday. This now signals that the Bulls may have regained control, and we're going to continue pushing price higher, headed in to the early part of next week, and possibly creating our Santa Claus rally that could push price to new all-time highs by the end of this year. To get a better idea of where the market is headed come Monday, Tuesday next week, let's now drop down into the 15-minute time frame. Let's go over our 200 period moving average. So you see here on Wednesday and the early part of Friday morning, we got quite extended from our 200 period moving average here, and price had to reverse direction and come back towards it. So if the early part of next week price is able to get above our 200 period moving average here and then back test it, and our 200 period moving average starts to curl back up, That would be very bullish for the bulls and would show that they have regained control. But if price remains below our 200 period moving average here and it continues declining, well then it is most likely that price will continue moving lower and will be breaking through our 587 level as support, and we could very well fall down towards 565.50. That is the bullish and bearish scenario for the SPY going into the end of this week. Let's now head on to the triple Qs here in the daily time frame. So just like on SPY, Wednesday's price action made the bear's presence known and pushed price all the way down towards 514.40. This is the level where it seems the bears could not push any lower, and the bulls have stepped up and are attempting to head back up towards 526.74. If the bulls are successful in getting above this level, that could very well mean that a Santa Claus rally is in order, and we may hit new all-time highs before the end of this year. Just like on SPY, the RSI is showing some bullish divergence between the lows here and the lows on price. This does signal to me that the bulls are gaining momentum and getting ready to push price higher. If we drop down into the 4-hour time frame, we will notice that the triple Qs are holding the 200 period moving average here on the 4-hour time frame. And as long as we remain above this, it is bullish for price to continue moving higher. Now, to get a better idea of where the triple Qs is headed come Monday, Tuesday next week, let's now look at our 200 period moving average. So as you see here on Wednesday and early Friday morning, price got way extended from our 200 period moving average here and had to retrace back a little. On Friday, we ended up coming all the way back towards it and tested it as resistance. Price does need to get above this to continue moving higher. If it remains to hold as resistance for the buyers, then it is possible that we'll break below our 514.40 level as support, and the triple Qs could head down towards 503.61. But if the bulls do manage to break above our 200 period moving average here on the 15-minute, and then we back test it as support, it is very well possible that the triple Qs will head higher and break new all-time highs. We'll first need to see the moving average start to slope upwards and start supporting the buyers for all this to happen. So that is the bullish and bearish scenario for the triple Qs headed into the next week. Now let's go over the VIX. Here on the 4-hour time frame, the VIX had a crazy day on Wednesday, filling our giant down gap from the Trump rally that happened a few weeks ago. If you notice here, our down gap is now fully filled, and the VIX managed to push all the way up and find resistance here at 27.95. As long as this level holds as resistance, then the VIX may very well continue falling lower. On Friday, it did fall below support here at 23.11, which is a good signal for the bulls to push price higher next week. We'll see if our 200 period moving average may act as support next week, here around $17. But if it does break below that, then we'll have support down here at $14.89. Now let's drop down into the 15-minute and check out our 200 period moving average. So So actually on Thursday, it looks like we got quite extended from our 200 period moving average, and then price had to fall back towards it. We are currently flirting with support and resistance right now at the 200 period moving average. If price can continue moving lower, and so we fall down towards our 1489 level, that would be bullish for the market to continue pushing price higher. But if price is able to get back above this 200 period moving average and stay above, and the trajectory continues to slope upwards, then that is bearish for the rest of the market, and we could head lower going into the end of this year. Alrighty, that's it for the VIX. Now, a new one for you. We're going to go over the US dollar, the DXY. Now this, like the VIX, has an inverse correlation with the SPY, which means when this is going up, the SPY is usually going down, and vice versa. When this is going down, the SPY is usually going up. So we'll go over some divergences that I have noticed that may signal that the dollar is going to fall, and which would contribute to a Santa Claus rally this year. So if we notice here between price, we have made a high and a higher high, but we do not have that on the RSI. The RSI has continued to make equal highs with the past 3 highs here. So this is some bearish divergence and could signal that the US dollar will fall below the 107 level the early part of next week. And if that happens, that will support the bulls going in to the early part of next week. If we drop down into the 4-hour time frame, we will notice on Friday, between Thursday and Friday, we did have some short-term bearish divergence here between the highs, with price on the DXY making a high and a higher high, while the RSI was making a high and a lower high. So that did contribute and played out towards the downside on Friday. Now if we go even further and look at our 15-minute time frame and the 200 period moving average, it does seem that price has fallen below our 200 period moving average here, which can signal some bearish price action to arise here on the DXY. If this does happen and our 200 period moving average starts to turn over and then support the bears, well, that would be bullish for the rest of the market. So we will have to see going into the early part of next week what the dollar does. Alrighty, that's it for the DXY. Now, last one, let's go over Nvda. So Nvda here on the daily time frame has a head and shoulders pattern that has formed over the last month or two. And now we have been flirting with the neckline for the past couple days. For this to be a confirmed head and shoulders here on Nvda, price must fall below and stay below 132.23. If the bears are able to break below the neckline, then that would signal Nvda would fall all the way down towards its 200 period moving average here on the daily time frame around 116. A full measured move of this head and shoulders pattern puts Nvda falling down towards 113.41. But there seems to be some shenanigans going on around the neckline at the current moment. If the bulls are able to hold this level, it is very possible that we go try to retest the 141 level as resistance. And if the Santa Claus rally is real this year, then it's very possible Nvda could break above the 141.05 level and push up towards new all-time highs. If we go back to our previous pattern that had broken out towards the upside, we do have a pennant pattern here Now this pattern ultimately completes up here around 173.75. So we have managed to get about halfway there, and then this just seems to be consolidation before Nvda is able to push higher and complete its pennant pattern here up at 173.75. Alrighty guys, that's where I'm gonna leave you on this video. I appreciate you guys watching, and I'll see you guys in the next video. Goodbye.